Hey everyone, and welcome. If you're working from home here in the UK, there's a good chance you might be missing out on some valuable tax relief. It's a tricky area, for sure. So to help us get our heads around the rules, we're going to dive into some expert guidance put together by the team at My Tax Accountant on this very topic. So let's just cut straight to it. The big question on everyone's mind is, are you overpaying on your taxes? Because honestly, figuring out how to properly claim for your home office could mean putting a pretty surprising amount of cash right back in your pocket. And that's why this guidance is so helpful. It really breaks down all the complex rules so we can all get on the same page. Okay, so let's start with the two main options you have when it comes to making a claim. All right, so HMRC basically gives you two main ways to claim tax relief for your home office. You can think of them as two different paths you can take. And, just like any journey, each path comes with its own rewards, but as we're about to find out, also its own risks. So, the question is, which path is right for you? You've got the simple route, that's a flat rate allowance. It's super easy, but the saving is a bit smaller. Then there's what we're calling the savvy route, which is claiming your actual expenses. Now this one's more work, no doubt about it, but it can lead to a much bigger payoff.
Okay, so let's take a look at path number one. This is the simple route, and HMRC has basically designed it for maximum simplicity. We're talking about the flat rate allowance.
Right, so this is the absolute no-fuss option. You can claim a fixed amount, it's £6 a week, which adds up to £312 for the whole year. And the best part? You literally don't need to show a single receipt or calculate any bills. It's designed to be quick, painless, and just done.
Okay, but what does that £312 claim actually mean in terms of cold, hard cash back in your bank account? Well, if you're a basic rate taxpayer, you'll get £62.40 a year. And if you're a higher rate taxpayer, that saving actually doubles to £124.80. It's not a fortune, but hey, it's a simple, guaranteed win.
Now, what if you're self-employed? Well, things are a little different for you. Instead of just one flat rate, the system is tiered, and it's all based on how many hours you actually work from home. So the more hours you clock in, the more you can claim, all the way up to £26 a month if you're working over 100 hours.
But let's be real for a second. With energy prices being what they are these days, that flat rate, it might not even touch the sides, right? So this brings us to path number two, the savvy route. This is where you claim your actual expenses, and the potential savings can be much higher.
Okay, so this is where we really get into the nitty-gritty. You can claim a portion of your actual household running costs. We're talking about things like your gas and electricity bills, your broadband, and even a percentage of your mortgage interest or your rent. Each one of these things, when you add them all up, can amount to a really significant saving.
So how do you actually do it? Well, the method itself is a pretty clear four-step process. First up, you need to figure out what percentage of your home's total space your office takes up. You can do this by room count or square footage. Step 2, you track how much time that space is actually used for business. 3, you gather up all your annual household bills. And finally, you just do the math to work out the exact business portion you can claim.
Let's put this into perspective with a real-world example. Meet Priya, a freelance designer. She went through the steps and worked out her business use was 20% of her home costs. Her total claim? A whopping £1,272. Now think about that. That's over 4 times the flat rate allowance. It's a massive difference. But, and this is a big but, it all comes down to keeping really good, detailed records. Okay, but hold on. Before you go diving into a pile of bills, you absolutely need to know that this path requires some serious caution. It's not all smooth sailing. There are some major tax traps you need to be aware of to avoid getting into hot water.
Right at the heart of all this is HMRC's strictest rule. It's called the wholly and exclusively test. And to put it bluntly, as the tax experts will tell you, this test can be absolutely brutal.
So what does that mean? It means your office space must be used for business and only for business. Any significant personal use, and they mean any, can make your entire claim invalid. And believe me, HMRC does check. There's a famous case where a claim was rejected and the person faced penalties, simply because an auditor found a sofa bed and some kids' toys in the office.
But honestly, the risk of a failed audit isn't even the scariest part. There's a much bigger, long-term financial risk that can be incredibly costly if you mess this up, and it's a hidden danger that only rears its head when you decide to sell your home.
And here it is. This is the big one. If you claim that a room is used exclusively for your business, you can lose a really important tax break called private residence relief on that specific part of your home. So what, you ask? Well, it means you could be hit with a massive capital gains tax bill when you sell.
Just look at the numbers. For a $400,000 home, we could be talking about an unexpected tax bill of nearly £18,000. Ouch! So there you have it. On one hand, you've got the potential for some really big savings, but on the other, some pretty significant and kind of scary risks. So the big question is, how on earth do you make the right choice for your own situation?
Well, this table really lays it all out perfectly, doesn't it? It's a classic trade-off. You've got the flat rate, low effort, basically zero risk, but a pretty low saving. Then you have claiming actual expenses, high effort and high risk, both from audits and that nasty capital gains tax, but with a much, much higher potential saving.
So you see, making the right choice here isn't just about trying to save an extra £100 this year. It's about making sure you don't get hit with a surprise £17,000 tax bill a few years down the line. It's one of those decisions you really have to get right.
And because the stakes really are that high, getting some expert advice is often the smartest move you can make. If you want to make sure you're maximizing your claim, but also safely navigating all the risks we've just talked about, it's a good idea to reach out to the specialists at My Tax Accountant. They can give you personalized guidance. You can get in touch with them on WhatsApp or by phone at 07854 255 375, or just drop them an email at info@mytaxaccountant.co.uk.